Alright. Hello, everybody, and welcome to this week's edition of Selfwealth Live, Selfwealth by Syfe Live, the technical analysis edition. Hey, Jace, how are you this week?
Hey, Rog, I'm good. I'm good. Looking forward to talking about some stocks and some charts, and yeah, should be all fun.
Yeah, certainly interesting. We did hit. I think it was on our show actually. Well, it might not be while we were on the show last week, but during that Tuesday, I think we just nicked that all-time high on the ASX, right? So hasn't really done much since, and a bit of volatility in the world, as we all know. But yeah, it'll be interesting to get into stuff along with all the viewers' tickers that we're going to get into, obviously. Welcome, Jennifer. Welcome, Daniel. Welcome everyone else. Make sure you put your hellos in the message box, making sure you can hear us, and just to say hello, it'd be great to see. If this is your first time, obviously we're going to go through the main three markets that we offer at Selfwealth, which is your Australian markets, your US market, and your Hong Kong market, just as a general overview. Basically, analysis of the indexes. All right, and then any general questions you may have, we'll try and get on top of them. And then it's obviously a good portion of this show is all about your tickers and analyzing them from a technical analysis point of view, right? So we look forward to seeing you're posting your tickers in there for today's show. But without further ado, Jace, we cannot do a show without a disclaimer, please. So if you don't mind.
Yes, a quick general disclaimer. So everything today, general commentary only, no personal advice. And I'll put up the note that we do each week, and this just goes through that. So I'm not part of Selfwealth or Syfe. I'm motion trader. So my details are at the top with licensing. The Selfwealth details are below there. So yes, Rog, general commentary only.
Thank you very much, Jace. Okay, so there's some questions in there already, but let's get on to this Australian market and let's see what's happened since it nicked that all-time high last week.
Okay, so let's start off with our ASX 200. So yeah, this extraordinary rally continues. It's a touch up, Rogers, a touch up more than 20% over the last 9 weeks from that April low. It's a touch over 20%. And so that's one of the fastest recoveries on record. Prices got to, so using this chart I've got here, which includes a night session, so that includes futures prices and such, it got to within 0.1% of an new all-time high on Wednesday. And that follows that relentless rally off the April low. I think there's a good chance we're going to see a new all-time high in the next week. It's so close now that once these things get that close, it sort of becomes like a magnet for the market, and it just draws prices higher. And that, of course, raises a question: well, what do you do now? Do you just go with this trend, or do you look for a top? And I think this is a really important decision for people trying to manage a portfolio, like how you play these things, going with the flow or looking for tops. Our regular viewers will know that I've been discussing the potential for a pullback towards this 50-day moving average for a few weeks now. And I've been doing that since prices started becoming stretched above the moving average a few weeks back. But look, prices have continued to push higher. Historically, we know that ultimately they come back from the moving averages, but that hasn't been the case yet. There was a slight pause three weeks ago, but as I said, other than that, it's just continues to push higher. A little bit of a pullback in the last week, but it's by no means that pullback towards the moving averages, which I've thought could be coming. So, do we steadfastly wait for a pullback, or do we just go with it? And I think the answer is, I think we need to go with it. Go with where the price action is heading, rather than like dig your heels in and say, look, the market has to pull back. And that's really been the approach since mid-April when we first started getting this rebound. It's been about a gradual move back into the market, and then a more cautious approach over the last, say, 3 or 4 weeks, as prices have become more stretched and moved towards the highs. And I think that remains the play here. I don't want to dig my heels in and say, look, the market's just gone too far. It has to come back. And it's because it doesn't have to do anything. There's nothing to say prices can't push higher and then pull back from higher levels. But I also don't want to get ultra bullish and go all in when prices are clearly elevated. So it's really a case of being long stocks, staying long stocks, but for the time being, only considering the best setups for new exposure. At least from my perspective. I'd really like to see what the next pullback looks like before significant further investment. There's been this scramble, really. It's been a scramble back into stocks. There was a scramble out of stocks or a panic out of stocks, and now there's been a scramble back into stocks. So the next thing for me to watch for will be for buying on the dip once this scramble ends and prices do come back and hopefully consolidate above the moving averages before moving higher. Overall, I think the market structure is positive, and that's why I'm generally happy to stay long stocks. We've got rising moving averages, say the 50-day and the 100-day moving averages are both rising, and prices are now well established above the moving averages. There's also that broad participation across the ASX. This isn't just about the banks rallying. We're seeing broad participation across a number of sectors and a different range of stock sizes, big, medium, and small. For me, at the moment, it's now just about balancing risk. The market is rising. I'm not going to argue with that. I'm happy to stay invested, hold what's working, and also happy to selectively buy stocks with strong setups.
Yeah, it makes sense, doesn't it, really? You just got to go with the flow, really. That's all we ever do, really. But I find it fascinating that it did do that right to the 20% drop, which would have been technically a bear market before it bounced right back up within a month, or what's that, probably 2-month period of just coming back and clawing back all those gains, right? So I find that really fascinating, right? So there's a lot of institutions that probably were looking at those levels there and wanting to know when they're going to get back in. I mean, this is all amid all the news that's happened as well, right? But it's just, I find it fascinating, right? That was
very much.
All right, let's. Well, it's pretty clear cut with the Australian market, obviously, as you say there, Jace. But what about the US markets? They haven't gone to all-time highs yet, but still very, very big turnaround still. Right?
Yeah, well, it's been a relatively quiet week for US stocks, but they're resilient. What has been interesting is their resilience to any potential negatives. Like just look at in the last week, or the unrest in the Middle East, and not much reaction to the downside. So potential negatives are being brushed off at this point, and I think that shows the underlying tone remains bullish. On Wednesday, prices, this is back here where I've got the cursor. On Wednesday, prices hit their highest levels since the breakdown on 21st of February. So that's, looking where they are now, where they got to, that's about 1.5% from an all-time high. What's been surprising is that there's been buying even on the shallowest of pullbacks. And just look at these low points since the April low, and even if it's just been like a couple of days of weakness, the buying quickly comes in and prices rise again. And often it's only, as I say, a day or two before prices regain momentum, and that's meant there hasn't been a chance for a longer consolidation. And compare that. What's interesting, just compare that to what we saw during the. Let me just resize that so it fits better. Yeah, just compare that to what we saw after the COVID crash low. Prices did have a couple of meaningful pauses where prices went sideways for a month, whilst they re-established themselves above the moving averages and then pushed higher. So compare that to what we have now, and there's none of those multi-week pauses. It's just been a continual move higher. And I think this is important as it shows buyers are quick to buy the dip, and it's not a case of sellers rushing to sell the rally. So that's the key underpinning of a bullish market. just quickly, let's have a quick look at the equal weight. So this is the S&P 500 on an equal weight basis. And this shows there has been more consolidation over the last 4 weeks. And I think this looks like a healthy consolidation because prices are finding support around these moving averages. So we've had the rally above the average and now we're having the consolidation along the average. So I think that's encouraging. The other important development has been that the moving averages have now crossed, and the 50-day, which is the one in red, is now above the 100-day moving average. And so when the shorter moving average is above the longer moving average, that's when you get the condition for an ongoing uptrend. It doesn't mean you'll get an ongoing uptrend, but the condition's in place. And I think the fact that we're seeing this in the equal weight, I think is positive because the equal weight is a real measure of participation. And if there's broad participation, then I think the rally's on firmer footing. So this rally isn't being driven solely by Nvidia and Microsoft and a couple of the big guys. It's spread across the market. I'm continuing to play this from the long side. The price action suggests that the interest is in buying the dips, not selling the rallies. But like I said with the ASX 200, I'm not rushing to keep adding exposure. I think it's a case of going with what's working and then managing risk with trailing stops.
Yeah, of course. Yeah, all right. Let's get on to we've got a couple of general questions here, but before we do that, let's get on to the Hong Kong market. I think they're all relative.
Yeah, prices are pulling back from last week's high, but not really a great deal of change overall. Prices are still comfortably above these rising moving averages, the 50 and the 100-day moving average. Prices remain above there. Overall, I think this looks encouraging, but I'd rather just watch this for now. Prices are approaching those highs from March, and that follows a largely uninterrupted run off the April low. So I'm not sure this stacks up as a great risk reward entry point at the moment. So I think one to watch just for now. And looking at the Chinese market, prices are trading along the moving averages. So we've got the 50 and the 100-day moving average. Prices have been trading across there for the last maybe 3 weeks now. I think it's encouraging that prices are holding on to most of the gains from the April low. So strong rally off the low. Prices are holding them. That's been a weak point for the Chinese market over the last 9 or so months, in that it's had a tendency to quickly give back gains. So what we're seeing now is actually holding gains. So that's positive. I think the key now is for a break higher. So I'm watching these two peaks from March. If I can just draw these in, I've got my clicker's not working, but you can see these highs from March. So that's what I'm watching now. I think a break above those would be the early signs of a bullish trend maybe getting underway. So certainly one to watch, and I'd be ready if this market was of interest. If we do see a break above those high points from, actually it's March and May. They're the 2 points. So a break above there, I think then we've got that would have a sequence of rising lows, rising highs, and it starts getting interesting.
Yeah, I mean, it's been sideways for a while because you also had those two peaks there in March. It was that March and October from last year as well, or was that from right?
Yeah, November and December got a couple of peaks there. So it's the lower ones which are the first point to watch, and then we have then as you note, Rog, those points from November and December. So it's very much range bound price action. We've had range bound price action for about 9 months. And so it's going to be interesting to see whether prices can actually lift out of this range and start to form a bullish trend.
Yeah. All right. Quick general question for you, Jace. With all the volatility that's happened in the world, Middle East, we'll call it, over the week, are you looking? I know you're obviously not fundamental sort of trader. We know that, but does that give you ideas to look for technical setups on these what we call these assets that generally thrive in these conditions. So, i.e., defense stocks, oil ETFs, gold, these things that generally tend to go up. Do you use these as ideas to look for technical setups at all?
Like I'm always like looking for setups. Like I go through the commodities each day, but it's not like when something's um, becomes so obvious, it sometimes isn't actually the right play. So there might be like a knee jerk reaction to buy oil or buy gold, but those political unrest doesn't tend to lead to ongoing upward trends a lot of the time in these things. It's at the end of it all, there's got to be the demand pushing up price. So people see news headlines say got to buy gold, and gold might spike for a week or so, but then like you look at what happened in the Ukraine invasion, there was a spike in gold, but then that was the high for a couple of years. You look at the invasion of Iraq back in the 90s. There was a spike in oil, but I don't think it led to a bullish oil environment for months going forward. So it's always just look for the right setups. I don't want to be rushing with everyone else to buy something, because that's when the risk reward can get knocked out of whack when you're paying an elevated price. I'd like to buy the consolidations along the moving averages, or the rallies off the moving averages, rather than buying when everyone gets excited, because excitement often leads to disappointment and realization that things aren't as extreme as people thought, and you can get some quick moves back. So not chasing hot stocks or sectors or commodities, I think, is something important to consider.
Yeah. All right. No, good response, as usual. All right. Let's get on to some questions here. First of all, we'll start with a question that's come from an email here. Quick question from Max. I have some REA shares. So let's have a look at REA. Would you consider it range bound at the moment? I guess, what's your thoughts?
Yeah, no, I seem to have an issue with my trading view. It doesn't seem to be updating. So that's going to make things a bit tricky. Let
Maybe just give it a restart.
Let me see if this can boot it back into action. There we go. That's better. Yeah, look, I'd call this range bound at the moment. We've got a high from February. We've got the spike low in April, and we're just kind of in between. I'd be happy holding a stock like this because it's been in a big uptrend. So big uptrends lead to consolidations. At the moment, it's doing okay. It's the moving averages are kind of starting to move sideways. It's just oscillating either side of the moving averages. My trailing stop would be, well, got my usual wide trailing stops. If I had this, it'd probably be below. Like, let's just measure that. How much was that? That was a 27% fall. So that could have been enough to trigger my wide trailing stop. Would have been pretty close. But if it missed it, I guess my trailing stop would now be pretty close to below, just around that April low point. So give it room to move within this range. And if it comes back, well, time for me to sell if I had it. But at the moment, I'd be happy holding it.
Okay. Before we get on to more stocks, let's get on to this general question from Daniel, which I think is a good one. Now I've lost it. Can you believe it? He's got a lot of good comments in here, Daniel. Thanks for that. Do moving averages actually help with long-term investing, or just for day traders who lose half their profits to tax?
Yeah, it's very helpful for day trading, but they're very helpful for, I think, across many timeframes. So I've used them for trading through the day, trading futures markets back at an earlier time when I was at the bank. Now I use them more as a medium term. So I'm using 50 and 100 day moving averages. So you wouldn't use 50 and 100 days for day trading. That's more attuned to trying to get a medium term trend, trying to get a stock which might rally for for a year or two, and this is a good example. So you can see where the price structure changes. So REA spent quite a bit of time below declining moving averages. Then we've got some sideways along the moving averages, and we actually get a breakout in March 2023, and so that's led to like 2 years, effectively 2 years of rising prices, where the price has mostly been above rising moving averages. A couple of little dips to below is not an issue because the moving averages generally remain up, and price doesn't spend much time there. And so you can just see this is a sort of guide the moving averages give you. It's a great visual where you can see price above moving averages, which are pointing higher, as opposed to periods where this has been a stock which has really trended well for a long time. So it's not the best one to give the example on. Best we have is just here. Whereas, like, I don't want to know about the stock when it's below declining moving averages. So they're a good and simple visual guide to what the share price is doing. Can they help with long term? I don't know. I don't know that they're really, like, you can look at a weekly chart but look, if you're long term, you buy and hold almost. It's like you're probably not looking at technical indicators like moving averages. It's not what I do. I'm not a buy and hold guy, so I don't know how to really make multi-year or multi-decade decisions around stocks. Maybe that's what you do around a sector, in which case, or an ASX ETF might be like a buy and hold, but I'm not looking at a moving average if I want to hold something for 10 or 20 years. It's just like being exposed to an asset class which has a tendency to rise over time. So it's a different type of thing. It's more, I think it's more for active investing rather than a more passive or very longer term approach.
Yeah, and it depends on what you define as long term, right? If you're holding a position for a couple of months versus a year, a couple of months to a year, if you consider that long term, then yeah, we could use moving averages and it works, right? But if, as you say, Jason, if you're buying and hold forever, then probably it doesn't really make a difference, right? Looking at
it's a very good point about defining what we mean by long term. Back in the trading floor, long term was 2 weeks, thereabouts. It's because we're very much focused on what's going on through the day, or maybe for a couple of days. You hold a position for 2 weeks, and the spot foreign exchange guys look at you as like, what will you do that for? That's like holding something till a super fund, because they're like holding positions for like sometimes seconds. So you got to define what time frame we're talking about. Everyone will have a different idea of what short term, medium term, and long term is. When I was talking about long term, then I'm thinking like up to a decade or longer. But someone might be thinking long term is a year. So you got to define it.
Yep. All right. Thanks for that. Let's get on to Jennifer's here. BMN just about to cross. Do I wait for motion trader signal, or normally don't buy until I get the motion trader signal?
Well, Bannerman is breaking higher. I've been talking about this in my Friday strategy session. It's been coiling up along the moving averages, and now it's got to break higher. I suspect that it meets the criteria for a motion trader buy signal. Although I was just measuring how far it is off its 5-week low, so the volatility filter might stop it from triggering a signal, but it meets the criteria from a moving average perspective and a 70-day high. So it's and we're seeing this across the board in the uranium stocks. We're seeing them breaking higher. This has been a point of focus in the strategy sessions over the last 3 or 4 weeks. We've seen this potential turn in the uranium price. It'll be interesting where they go to from here, but I think the structure's in place for the potential of higher levels. It looks like we've got this general shift from having spent time below moving averages to flipping above the averages, consolidating and breaking higher. So that's often a sequence which can lead to higher levels.
Okay. All right. Should she wait or wait for the MT signal there, Jace? That's the question.
Well, It's I don't know where it's going to close today, and that'll determine whether it breaches a volatility filter.
Yeah.
So there's a bit of calculation involved in it, but it meets the general framework:
Okay.
positive moving averages and breakout. So that could be a buy. Like I can't, of course, tell anyone, okay, you should buy it now. So I'm just talking generally. Um, if the stock was bought today at current levels, like where do you put a stop? A stop's I'd probably think it needs almost 25%. So just get it back towards below the moving averages. So 25% of risk, and it's one of those stocks which could double. So I think it's a fairly asymmetric point. Earlier in the day would have been better, as it was just starting to break above these highs. But this is the thing. Sometimes we get fast moves and we don't get lots of time to react. If you're waiting for end of day signals, which is typically what I do, yeah, sometimes you get these fast markets and the setup becomes less attractive because you get these quick moves. So it's up 12% today, and it looked like it was up about 10% yesterday. So it's one of those sectors that can move quickly.
All right, let's get on to DRO, please.
Yeah, this has been interesting. We've seen this develop over the last couple of months. We've been reviewing this, how it's moved from below the averages to above, and the consolidation, the rally off the averages, and now we're getting another rally off the averages. I think we've discussed like this being a stock which could have been bought like several times. I think we've discussed that, and now we're seeing it continuing to move higher. It's certainly being helped by the global unrest. If I had this, I'd keep holding it. I'd struggle now to. It's a harder one to buy because you've got to think like, where do I put my stop? Like you're looking at a bit over 30% just to get back to the 50-day moving average. I guess a more aggressive stop would be like current levels and just below this recent sort of like sort of like swing low. That's going to be 25%. And look, I think maybe if you wanted to go with this sort of thing, the best time would have been, as we were speaking about it over the last few weeks, particularly when we got this break higher a couple of weeks ago, break by the previous high. It is chasing a bit at current levels, but a 25% stop and a volatile stock is probably still reasonable. If I had it, I'd very much be happy holding it.
Okay, let's have a look at TLS. Obviously, while we're looking at these, what I'll do is we'll manage it as best we can, but probably just go through 2 to 3 of each person's tickers here, and then if we've got time, we'll circle back to them.
Yeah, we've looked at this a few times, and it still looks good. We spoke about looking good last time, and I think the time before, particularly when it broke above this overhead resistance back in March. What was really interesting was during all the volatility in April. Like, look what Telstra did. It barely came back. That was a sign of like strong buying interest on that pullback. And so I'd very much be staying on this trend, see where it goes. It's been going well. It's got a well-defined uptrend. Very happy holding a stock like that.
Yeah, how would you get into it? Any way to get into it?
I'd probably be waiting for the next pullback now. It's a bit like the ASX 200 in that it's a sort of like ASX 200 has been a process of like gradually getting back into the market over the last 6 to 8 weeks, rather than waiting for it to get up to current highs and then starting to buy. So if the ASX 200 does have that pullback, you'd expect Telstra to have one too. Just looking at the price action over the last, just this section here, the last maybe week and a half, it does seem to be losing some upward momentum. Maybe it's a sign that it's getting close to a consolidation. So I'd be inclined to wait. If I was looking to buy it, I'd probably be looking to wait for the next consolidation rather than buying it at current levels where it is a bit stretched above the 50-day moving average. I wouldn't be trying to be too clever if I owned it and saying, "Oh, look, I'll take profit and I'll buy it back," because it might not pull back. But from a risk reward perspective, I don't think I want to buy it today, I'd wait for that next consolidation. And if I miss it, I miss it. Sometimes that will happen, but risk reward wise, I'm probably not a buyer at current levels.
Okay, fantastic. NDQ.
So this is a Better Shares Nasdaq ETF. So we probably should really look at the Nasdaq, which we'll do. So there's the ETF. So it's priced in Aussie dollars. So it's going to look a little bit different to the Nasdaq, which will be in US dollars. So it's like what we said about the S&P 500. I want to play it from the long side. It continues to push high. The dips have been shallow. They've continued to be bought. If I was in this, I'd be staying in it. I'm not sure I'm so keen to be buying it at current levels, because you can just see these previous highs. It's now just below previous highs. It is still elevated above the moving averages. I've said it for several weeks and it hasn't happened, but at some point there will be that pullback to the 50-day moving average. So I'd be happy to stay on something if I was stay on in an index or a stock which is a bit elevated, but I don't necessarily want to buy it, even if it's continued to grind higher over a few weeks. I'm watching these highs. It's a stay in, but yeah, I'm just struggling to say, look, I want to start adding to a position or establishing a position at current levels.
Yeah. All right. WOW. WOW.
Yeah, it's still fairly early. I could spend a lot of time below moving average. It's been a stock which has been out of favour largely for a couple of years, but we do have a potential turning point from below the averages to above. It's now got the consolidation sideways along the moving averages. I would probably wait for some more upward momentum, buy a break higher. So one strategy would be buying at current levels, just setting a stop, maybe back down towards $30 or something, like comfortably below these moving averages. Alternatively, buy a break above, like you could even use the high from, looks like 4th of June, so a bit above there, around maybe around $33. If it rallies to 33, you're buying a bit of a breakout and going with that. Certainly turnaround potential with Woolies. I think we can afford just to probably watch it for a little bit longer. Just see how this sideways plays out. Does it track sideways for a few more weeks? Does it pull back a little bit further, or if it starts to run by the breakout?
Okay, let's move on to Jacques now. Let's have a look at ABB.
It's a choppy uptrend, but it is an uptrend. It's if I had this, I think I'd be happy continuing to hold, just having a stop loss. It'd probably be like I'd be using the calculated motion trader stop, but probably at least giving it to below the April low, so giving it plenty of room to move around. But it is generally a sequence of it's largely rising lows. It's not exactly that, because you can see April dipped a little bit below the March low. But generally the lows seem to be rising and the highs seem to be rising. So they're the building blocks of uptrends. It doesn't have a great deal of momentum at this stage. Not to say that can't accelerate. I think maybe as someone was considering buying it, probably a break above those previous highs around 430. That could be a possible acceleration point. A break there, it could start to pick up some momentum. So that's an interesting point to keep an eye on. But yeah, look, happy to hold it. Probably consider buying it on a breakout, trailing stop, and see what happens. But you can see it hasn't been a terrific trend over the last almost 3 years. It's been messy upwards. So is that going to change? We don't know. But it can. So there's nothing wrong with maintaining a position.
All right. MGH.
Deep pullback during that sell-off period. So that would have that's more than enough to take out my trailing stop if I'd been in it. And I know this had been a motion trader stock; it had done quite well, but then you get that trend change. So we never know. We never know which stocks are going to deliver the big 100% plus gains. It's a case of like having for me, it's many relatively small trades. When I say small, it doesn't mean $1,000 trades necessarily. It's like relative to your portfolio size. So if you've got $100,000 of capital, relatively small could be $5,000 or $10,000, or depending, whatever suits the individual. But we never know which one's going to be the big one. So you're going to get lots of stocks like this, which look like they're doing nicely, but then sort of come back and just don't really deliver a great deal. So I'd be out of this one for now. It has come back nicely from below the moving averages to above it. It does look to be consolidating around the moving averages. So maybe it is sort of setting up to try and push higher again. If I was holding it now, I'd probably continue holding it just with the stop back below those moving averages, giving a little bit of room to move around. But if I wasn't in it, I'd probably be more interested in buying a breakout rather than just trying to buy it at the moment. I'd probably be looking at it maybe around like towards 460 if it can rally off the moving average and start to push high, or maybe it's starting to re-engage with some momentum and go with that. But for now, I'd probably be inclined to just watch it.
Okay, let's get on to Jag Jeets. KNB, please.
KNB.
Yep.
Yeah, and this is the thing with these smaller stocks. They can really take off, but they can come back quickly as well. I'd probably be inclined to be getting out of this stock if I was in it. Like a wide trailing stop could still give it a little bit more room to move, assuming like in from like a really good level early on. But if I was in at higher levels, I'd probably be closing this one out because the percentages get quite large as if buying it in late April, that's it's down almost probably around 50%. So I wouldn't want to be staying in for that. I wouldn't be buying it here. If I had it from good levels, maybe I can give it a little bit longer, but I'd be considering where my exit point is. We see this happen in these smaller stocks. They have a boom run, but then they come back and they give the whole gain back. So I don't know that's going to happen here. Could stabilize and have another run higher, but I don't want to get stuck in a stock like this for years because I bought it on the basis that I thought something good was going to happen. It runs, gives it back, and then bounces along the bottom for a long time. So I always want to make sure I've got a way out and I'm not stuck holding for forevermore. To get interested in this again, it needs to stabilise, it needs to get back above the moving averages, and we can look at it again. But at the moment, it's in it's a position to be alert about.
Okay. Next one from Jagjit is LTR.
It's just a bit messy. This one, it's I looked at this myself. Back in March, I actually bought a position. Like we had this sideways consolidation. It was still below the moving average, so it was preemptive. But I was going with a breakout. I bought a breakout out of this sideways pattern, and then it quickly lost ground, and I just closed the position. Didn't cost very much, and hasn't done very much since. It's still just sort of like bouncing along the bottom. Strong move up, came back quickly, wasn't particularly supported on the way down. I'd just leave this alone for the moment. It's too messy. Moving averages are close to crossing. I think it probably needs to. Something could develop out of this. Maybe there's an early case of rising lows. Um, I'm probably looking at it on some more strength. Maybe it's got to get above the that May high. For me, can come back and look at this in a week or two. For now, for me, it'd be a watch. It could develop from here, but it could also just continue to meander sideways. Not enough, I think, to initiate a position.
All right, CXO.
Pretty much the same with this. Like again, the moving averages are getting close to crossing and it's above the moving averages. So maybe something's starting to develop, but it's still just a little bit early. Maybe a break above the May high again could be caused to give this a go. Just looking at the lithium ETFs in the US that I keep an eye on. Yeah, they're still got those declining moving averages. Maybe they're starting to turn, but it's just a little bit early still. And this one, they've just got a different composition of stocks. Moving averages are still in decline. So, yeah, there's some early signs that maybe we want to keep an eye on stocks like Liontown and Core Lithium, but I'd be hesitant to jump in just yet. Watch list, watch closely, but I think hold fire at the moment. If they break higher and you had to pay a bit more to get in, well, that's not necessarily a bad thing, because it also keeps you out. If they don't buy higher, rather than buying now and find they don't break higher and instead they come down again, well, that's the benefit of waiting. So the cost is you pay more. The benefit is you might not have to get in at all if they never break higher, at least in the near term. So for me, it'd be a case of watch at the moment.
All right. Kirby asked for PTR, please.
Yeah, this is an interesting one. Big gain, and now it's holding on to much of that gain. So there was initially a quick give back, but now it's stabilised along the moving average. So if I had this, I'd continue holding it. Probably not a rush to buy it at the moment. Maybe it continues to go sideways for a longer period. Maybe a break above the May high would be an entry point if it's about to regain momentum. So for now, it'd be it's a hold if I'm in it, and I watch it if I'm not. But it's encouraging that it's holding onto most of those strong gains from last November, December.
Okay, fantastic. Thanks, Alan. He just said thanks for running these shows. Much appreciated. We appreciate you guys being here and wanting to listen and learn from us as well a lot. So thank you very much for the compliment. I skipped over Alexandra's, so let's have a look at those ones now. WDS, please.
Oh, this would be interesting. Haven't had a look at these in the last couple of days, and yeah, there's a big move higher. So I've generally been saying, look, I just want to leave oil alone. With the oil price consolidating at low levels below moving averages and such. But maybe there is a turn underway now. Woodside, the moving averages are now starting to turn higher. Long period where it's just been a stock to avoid. Chances are there'd be a consolidation following an initial strong move, and that consolidation could set up an entry point. So let the moving averages cross, see if we get a consolidation while the moving averages catch up, and maybe there's a buying point developing in Woodside after a long downtrend. It's possible it pops higher again because there's like now takeover activity around Santos. But I'd be inclined to, I just think like managing risk, buying it at current levels would probably entail a stop of 15%. That doesn't seem like such a big stop, but doesn't have the same upside potential as some of those small to mid-tier stocks. It's probably not the sort of stock that's going to run a couple of 100% in a year. Or anything can happen, but the risk reward parameter is always a little bit different with those bigger stocks. So yeah, if I was holding it, I'd be happy doing so. Otherwise, watch for the next consolidation, and maybe there's an entry set up.
Okay. STO.
Well, this is all unfolded quickly. Yeah, it's sometimes it's disappointing when you start to get the price goes from below to above the moving average. The moving averages start to cross, but then you get a gap higher and you miss it. And that's like that's going to happen if you're rules based and you're using the moving averages and they just don't swing fast enough. So it's going to happen from time to time. I think there's lots of occasions you're on the right side of a good move, but there are going to be occasions as well where you miss a good move, and that's just the way it goes. If I had this, I'd continue holding it. The bid price or the takeover price is I can't quite remember. I think it's north of 850 potentially. But then it's got foreign review boards. There's all sorts of fundamental things that need to happen. But I probably wouldn't be buying it at current levels. There's always risk of the takeover not going through and it quickly comes back. But certainly one I'd be happy holding at the moment.
Okay, fantastic. Let's go on to Michael Im's. It's TNE, which keeps making new highs. How do you manage risk on entry? Need your risk to reward ratio, and how do you know when to sell after getting in?
Look, I think it's a hard one to buy at the moment because it's run so far above its moving averages. Let me just put this indicator on which shows how far above the 50-day moving average it is. Just compress that a bit. Like you see where it's been. Let me just run a marker along there, and maybe I'll do this on a weekly. See whether that works. Just I can't compress the chart enough to demonstrate. So look how far above it's never been this far above the 50 week moving average other than in December. And so what happened in December? Got above the moving average, and then there's a pullback. Well, that's during the there's general the market volatility. It pulled back to the average. It's jumped back up. It's stretched. So by historical standards, you say, look, it's stretched above its moving averages. So that would make me apprehensive to buy it at current levels. I'd certainly be happy holding it. If I had a particularly large position, I might even consider taking some profit if it had become a significantly larger weighting within my portfolio. But if it was still a reasonable percentage within the portfolio, maybe I'd be happy holding the whole thing because the trend is up. Who's to say that the trend has to stop here and it can't get more extreme? But from a risk management point of view, I probably don't want to buy it here. I think wide trailing stop, a motion traded trailing stop, is going to be it would be significantly lower below the 100-day moving average. Buying at current levels and risking 25%, I don't know. I just don't think that's a great risk reward play at the moment. So yeah, Rog, I think for me this would be a hold, not a buy.
Okay, all right, fantastic. Let's have a look at this is going on to American stock, I think. So can you please give some insight onto SLNO, which seems to be consolidating for a while? How to know if it might have momentum upwards from K?
Well, it still does have momentum upwards. It's sort of been grinding higher. Look, it's a bit of it is sideways towards the moving averages, and now it's started to push higher. So maybe it's not grinding, but it has had a strong rally followed by sideways, and now it looks like it's starting to push higher. I'd be happy holding this stock if I had it. Look, it's it's possibly a buy as well. It's not stretched above the moving averages. I guess risk can be managed with a stop just back back towards maybe the 100-day moving average, just below these recent lows. So it's got this series of rising lows at the moment. So if it bought at current levels, a stop back maybe below the May low, and see if it continues to run, or holding position if established. It's doing all the right things. Rising moving averages, above the moving averages. Yeah, never know how long a trend can run for. So that's why we do. We don't cap our upside, leave the upside open ended, and see where it goes.
Okay. Keith, BHP, the no longer great Australian.
Yeah, I'm sure it will be great again, but not at the moment. And I don't see the hurry to get into it. It's still below these declining moving averages. I haven't thought there was a rush to get into BHP since November last year, and that remains the case. There are other places to park money and other setups to follow than trying to pick a low in a stock which continues to move below declining moving averages. And looking at the iron ore price as well, like iron ore prices below these declining moving averages, it looks like
Sorry.
just looking where the iron ore price is now, it looks like it's losing its footing, and then we could get a decent downward swing in the price. And if that were to happen, well, of course, that's negative implications for BHP. So I don't think there's a rush to buy it. Long-term holds will fine. People might have been holding this for years. It's not a suggestion everyone should run out and sell long-term holdings, but I don't see the upside story developing in the near term until we get price back above moving averages, which then start to move higher.
Okay. Maurice asked for EL8.
Yeah, it's an interesting one. It's another uranium play, and it's starting to break higher. It's look, this is possibly a buy now. It's similar to what we were discussing with Bannerman. This has had a sideways consolidation along the moving averages. Moving averages have crossed and turned higher. Now got a breakout. Could be bought at current levels with probably a 25% stop just below the low from 3 days ago. Has been a fast move. I wonder where, like, I was looking at the uranium price as well, and uranium price from last night, it opened, traded higher, but then closed on its lows. So I'm surprised we've got the strength we do in the uranium stocks, given the price is only just above where it closed the previous day, and you got this negative sort of price action where it opens, trades higher, and closes on the lows. That would suggest there's more consolidation in the uranium price, but the stocks are running, so I'd go with the breakout, and I'd be probably. I'd be mindful that the uranium price does have that conflicting price action overnight. And is this going to continue to move up at 10% a day, or is there going to be a bit of pullback and consolidation? So that makes me think. Like, I considered buying some of this a little bit earlier today. Then I looked at the uranium price. I thought I might just watch this for another day or two. I've already got some Bannerman. I bought some Bannerman in late May and have sat through this bit of consolidation. But I haven't added. I spoke about in my strategy sessions about adding on a break above these recent peaks, but it's a fast move, and the uranium price conflicts with it. So I might just sit with what I've got at the moment and see where it goes. But this could be a really nice period in uranium setting up. So it's going to be a space we want to continue to watch, I think.
Okay, fantastic. Nice one to keep an eye on. I think we'll put that one in as contender of the day for now.
And it could be like, if someone didn't have any exposure and wanted to get a starter position, perhaps maybe a half position could be considered. and accepting that, okay, I'll get something on board now just in case this does continue to run. I don't want to then be looking on going, now I've got nothing, and it's everything's charging. But I don't want to go in too heavy now, because there's that conflicting uranium price, and maybe stocks do pull back a bit. So I get some on board. So I'm managing my regret, the regret of buying nothing and watching it soar, versus the regret of steaming in and buying a big position and watching it all pull back. So I'm go somewhere in the middle. So I balance my regrets. That can be a good way to approach things. I've got to start a position, so I'm okay to just watch it just here. But depending on what you're doing, how you want to manage your own risks, there are various ways it can be played.
Yeah. Let's have a look at Rodney's now. It's MLG.
Yeah, it looks like it continues to build. Like, had this basing period, got above the average, consolidated, broke higher, had a run, another little pullback, and it's getting a bid off that recent low. Whether it now from here, I was looking at a similar stock this morning. It's like, do we see more of this? Do we get more sideways while the averages catch up, and then from there perhaps it rallies again, or could it just go straight away, but then have a pullback from higher levels whilst the moving averages catch up? I don't know which way it goes. If I had this one, I'd be happy holding it. If I didn't have it, it's a case of like, well, how could this play out from here? What's the gold price doing? The gold price looks like it's poised for higher levels. Maybe I'd just look buy a stake here and accept maybe we get some consolidation before a potential further breakout. Of course, it might fail completely and come back, but at this point, the momentum is to the upside. I think is a stock worth having exposure to.
Okay, fantastic. Let's have a look at CU6, please.
So this one's fallen from grace, and it's so this was a motion trader stock. Entry was way back in, I don't remember. It was quite a fair way back, late 23 or early late 23, perhaps. Great upward trend. Then it came back. I had this stock myself. Hit the trailing stop around November last year, and this is why we have calculated exit points. So there is a line in the sand. It's okay. We're going to give it room to move, but if it crosses that line, it's time to say goodbye. And this is why we have those lines in the sand. It's like people get frustrated when a stock comes back and triggers the stop and then rallies again. But I always say, look, they're not the ones that cause the problem in the portfolio. Yeah, it's frustrating, but they don't cause the problems. The problem is when you don't have an exit point or you ignore your exit point and you get this continued unraveling. So it's not a stock I'd be in at the moment. Can it turn around and have another rally, another strong period? It certainly could. Just look at what Drone Shield's doing now. But for me, it's just a little bit too early because these moving averages are still in decline. At the moment, it's just a rally back to the 50-day moving average. Now, this could continue to build from here. With this stock, I'd probably and I even look at the latest price action. It looks like even a strong few days in this sideways consolidation, which has held onto its gains. So it gives some signs that maybe it is starting to turn higher, but I'd still stay on the sidelines for now until it gets above the moving averages and we get a little bit more signs that turnaround could be underway. I'm not saying it's not underway, but at the moment I'll default to the declining moving averages and price being below the averages. So I'd leave it to the side for the moment.
Okay, fantastic. I can't advise you if you should buy Bitcoin now, but what's that looking like, Ahmed?
Looks interesting. It's coiling. It's coiling up. It's coiling up along the 50-day moving average. It looks like it's setting up for a new high. I've got some Bitcoin. I bought some in, I think it was late April when prices flipped from below the averages to above. It's had an initial run, and I've just been sitting through this sideways consolidation. I think next move is higher. I think a new all-time high in Bitcoin is on the way. Of course, I could always be wrong and it breaks down, but I always feel the odds favour the prevailing trend, and that's up, consolidate, often leads to more upside. So let's see how it plays. So what could be done? I guess position could be bought at current levels with a stop below the 100-day moving average, or alternatively, you're buying the breakout from a trading range, break above the January 9, I think it is, high, potentially buying that and then seeing where that runs. So a few plays, couple of potential options in Bitcoin.
Yep. All right. IVV and VAS. So they're both ETFs, aren't they?
Yeah. So IVV is S&P 500. So we kind of talked about the S&P 500. So what we said there would still apply. I've got some IVV. So I think that's, I've got some IVV. I'm happy to continue holding that. It's consolidating above the moving averages. So that's all fine. Nothing says it can't pull back and fall below the averages, but at this point, it's consolidating above. So I think that's fine for me to hold. Just like I said with the S&P 500 section. What was the other one, Rog?
VAS, which I'm sure that's the Australian one, isn't it?
And that's the an ASX 300 ETF. So we don't need to go through that again because it's essentially what we discussed with the ASX 200. But I'd be happy holding at this point.
All right, let's have a look at MPW, please. But if you need to go look at the ETFs that just really follow the indexes, just jumped out back to the start of the show if you missed it, all right, where we talk about the general markets around the AU, US, and Hong Kong markets, right? So,
well, this has been a rocket ride. This one, it's if I had this one, I'd be happily riding the trend, see where it goes. Although I'd find it, I wouldn't be able to buy it at this point. 'Cause how do I manage risk around this? It's like it's so elevated above the moving averages. It probably needs to pause. Not to say it has to pause here; it could pause from a higher level. But from a risk reward perspective, I don't think it's an entry, but it's certainly a hold. The time to buy was probably as it was breaking higher from these consolidations. So you had that initial move, then you had the sideways consolidation while the moving average started to catch up, break high. That was probably an entry point, and then another entry point was probably in mid May, and now it's just running. So I'd let it run.
Nice one, that one. All right. What about MTM? Andrew, surprised no one's picked that one up. MTM for Mary.
Okay.
Yeah, a lot of these metal.
Yeah, there you go. That's
another one.
It's a similar situation to the one we just looked at, in that it went from below the averages to above, had the consolidation back to the averages, and had a run, short run, but nonetheless that would have been an entry point as it rallied off the averages. Another consolidation back to the averages, and then another break high. That would have been another entry point. Now it's a case of, if I was in it, I'd be letting it run. Unfortunately, I'm not in it, but it's. It's a case of wide trailing stop, see where it goes. It's trends well and truly up at this point, but a tough one to buy given it's stretched above the moving averages.
Yeah. All right. We've got a few here from Greg, so we'll start with two, and we can always circle back if we need to. Rio, please.
Look, similar situation to BHP. I'd just be leaving it to the side at the moment. It's just on the wrong side of the moving averages. It's not to say that it's that it has to keep going lower. It could just continue to meander sort of sideways, but the momentum is towards the downside. I'd just leave it alone. yeah, there's for me to get interested in on the upside, it probably needs to get back above the moving averages, probably needs to get back above the May high. So we start seeing higher highs, higher lows. That's not what we have at the moment.
Okay. PME.
Yeah, a lot of volatility here. This was a motion trader stock, got stopped out in this in the April sell off. Now it's snapped back. It's had that below the moving averages back above, and we're getting the consolidation now while the moving averages catch up. So if I was still holding it, if I was in, I was still holding, and I'd survived that sell off, or I'd bought some on the way back up. I'd be happy to keep holding it and see where it goes, because this is on the right side of the moving averages now. See if we get some sideways consolidation and then a further breakout. If I wanted to buy some, well, it has come back to the moving averages. I guess it could be considered as someone particularly liked it. Probably could be bought at current levels and say maybe a 15% stop back below the 100-day moving average. But you're doing so on the basis that it's currently chopping sideways, and there's nothing to say this sideways can't turn into a larger pullback. So there's a bit more risk, I think, when you do that, when you're preempting a breakout to onward momentum. Alternatively, just watch it and buy a break above the maybe above the recent high in May. But it's come such a long way. It's one of those harder stocks. Like when a stock goes from $35 to $300, like, I don't know that we should be extrapolating that trend forward. Ultimately, these stocks have long consolidations when they go through these big upward phases. So it's not one I'm particularly excited about at this point. The exciting part was has passed for the time being, and future returns, I think odds favour, are not going to be like what we've seen over the last couple of years. But nothing wrong with holding this if still in it, and see what it can do.
Okay, let's get on to Sydney's. STO, please.
Sorry, which one, Rog?
STO.
That's Santos. We've done Santos.
Oh, have we? Sorry, then we'll do MIN. N for Nelly. MIN.
Still below these declining moving averages. It's we looked at another stock. It's a bit like, it's almost like a little bit like some of those lithium plays as well. So it's come back to the moving averages. It's like, I like looking at the rally over the last couple of weeks, strong rally, and it's holding on to those gains. So is it setting up for another push higher and potentially a turnaround? So it could be, but we're still trying to pick a turning point, buying it at the moment, I think. I'd prefer to wait, and I'd prefer to see a break higher, then a consolidation while the moving averages are turning, and maybe buy the next breakout. So it's probably still a little bit away for me to consider buying it. But that said, you can manage the risk around current setup. So you look at the current price and you go, look, if I bought now, I could have a stop below the recent low, which is still a decent stop, looking at 27%. But if I get the turn right, there's good upside in it. So there's a way to play it, but there isn't an established trend at this point. It's preempting that it's preempting that the early signs of a possible turnaround could continue to develop, and then that moves into a trending phase. But that's not there at the moment. So for me, I'd leave it. But yeah, there's certainly a way to play it if you want to try and pick the turn.
Okay, NEM.
So we'll look at the Aussie listing first, and that's so it's taken over Newcrest's listing. So it only doesn't go back so far, and the price action's patchy. But yeah, it's hitting new highs. Now let's have a look at the US listing, which is the most important one, and it's been a lagger in the gold sector. But it's that's not to say that it can't do well. If I had this, I'd continue holding it, and I kind of do have it because I've got GDX gold ETF, and Newmont I'm pretty sure is the largest holding in that. So I've kind of got it through another source rather than owning the company direct. But it is starting to break above. Well, it's broken above the April high, getting close to clearing the October high from last year. Looks like there's been a bit of a range, which coincides with the range that gold's been trading in. I'd continue holding it. It can possibly, it even could be considered as a buy with a stop probably back towards a 100-day moving average. Could this over time trade back towards its all-time high from 2022? I think it certainly could. Not in the near term, of course, but it's certainly got upward potential. It'd be a stock I'm happy holding.
Okay. The next one is from Jesse, VNL.
Range bound, but it's a really clearly defined range. Nice initial, but this is why we don't buy stocks when they get excited. People get excited about it and they get stretched above moving averages because often, not always, but often they lead to ranging periods. Or as we saw in 2020, they come back and go through much longer consolidations. But at this point, it's range bound. You can even put some lines on it to firm up the visualize the range. That's the range. So ways to play it. If I had it, particularly if I was in at good levels, I'd continue holding it. Another strategy, if we particularly like it, it could be bought at current levels and put a stop below the recent low, which is about 25%, which isn't bad for a 10-cent stock to be able to have a 25% stop on it. Alternatively, we're looking at buying a breakout. Maybe breakout points a little less clear because I don't know that I want to go off that trend line specifically. I'm looking at the previous highs, but look, maybe it even could be a breakout above the recent highs at around 13 cents. So maybe it's around 15 cents. Just giving a bit of a margin above the recent highs, clears that trend line. And then you're managing a stop back towards the moving averages. So interesting stock. It'll be interesting to see whether this plays out into a break to the top side in a trend.
Okay. DYL.
So this is uranium again.
Mm-hmm.
And like we've missed it for now. If not in it, I think it's been missed for now. It just happened quickly. We're starting to get the sideways consolidation along the moving average. It was setting up nicely. I was hoping we'd get more consolidation and then a slower breakout, which saying, okay, we're now starting to break out. Sometimes it just doesn't play the way you'd like it to play. And so it was having to be quick yesterday and buying it as it was started to clear the June 10 June high, or saying, I've missed it for now. I've got to wait to see what the next consolidation looks like. I don't want to chase it, particularly what we've just discussed with uranium, that price action we saw on that. But if I had this one, I'd very much be happy to hold it and see where it goes.
All right. Let's have a look at VCX, please.
Upward trend, happy to stay with it. Yeah, look, it's just continued. It's just been a not a fast moving trend, but just it's been a gradual upward trend for several years, notwithstanding some pullbacks along the way. But with wide trailing stops, a lot of those could have been seen off. I'd be happy holding this one. If I particularly wanted to buy it, I guess it could be this pullback could be an opportunity to buy it. It's just above the moving averages. I think the odds favour the incumbent trend, and it's probably a dividend payer. So look, holding it or maybe buying at current levels with a stop back below the 100-day moving average is more of a medium term play. Could be considered.
Okay. URW.
So this is we're in the realm of the property trusts here, and same situation to a reasonable extent. Upward trend, consolidation. Now it's lifting out of another consolidation. Happy holding it. Probably could consider buying it at current levels because it does seem to be coming out of this this broad consolidation period. Like I don't think it's a great standout, but it's yeah. Look, it's I think it's in a trending phase. So I think there's further upside potential. I'm not sure whether they've reinstated their dividend or not. I know the dividend was suspended a while back. I don't know whether it pays dividends or not. But if it's particularly if it's paying a dividend and you got rising trend, it's these can be some of these property trusts can have a good place within a portfolio. So I'd be happy holding this one.
Okay, fantastic. Well, we're got a bit of time here, so let's go and have a look at SXE. Enjoy.
Really a bit. It's popped up today, but it is range bound. It's it's just stuck. You can see the high from August last year, the high from May. Then you got the low points. If I was holding it, particularly from lower levels, happy to hang in there, keep holding it, just sit through this consolidation, probably pick up some dividends. If I didn't already have it, I probably don't need to rush to buy it at the moment. It's probably more a case of, if it starts to clear the May highs and get some momentum back, well, then that could be an entry point. Then at the moment, I'd just hold it if I've got it from good levels, or watch it for now because we don't know. This sideways consolidation could continue on for several months, or it could also or it could start to unwind. We don't know. At this point, I'd be giving the benefit of the doubt to the upside. Hence, happy to hold it if in at good levels, but I don't think there's a rush to get involved today.
All right. I think we looked at this one last week. It's got an interesting name. I don't know what it is, but Kolti Patel on the NSE, New York Stock Exchange.
What's the
just type in KOLTE.
Sorry, KLL?
KOLTE. I'd say it's that top one there.
Yeah. Right? I think it's an Indian stock. It's also listed on the BSE. Actually, is that the NSE? At any rate, it's Look, it's. I'd be happy holding it. It's trending higher. There's that nice classic movement from below the averages to above, the sideways consolidation along the averages, while the averages catch up, and then the breakout, moving averages cross. So that's all textbook stuff. So this was a nice entry point in mid-May, and now it's a case of let it run, see where it goes. Yeah, it's Look, I'd be happy hanging in this one. Probably not a buyer because it has had a decent run off the moving averages. Next consolidation, see what that looks like, is probably the next entry opportunity for me. But yeah, happy to hang on to it.
Okay, we'll finish up on this one. NST, please. I wonder if it's time to sell.
Well, trends up in most gold stocks. So I'm happy to hold on to gold stocks. I speak a lot about gold each week in my weekly strategy session on Friday. I think the key with gold stocks here, it's continue to hold what's working, but also I'd suggest ensuring a portfolio is not too heavily weighted in gold. Gold has come a long way in the last year, and it's the prospect for volatility, downside volatility, even in a larger consolidation, downside volatility, I think is very much there. So I'm long gold. I'm long gold stocks. I'm happy to stay that way. But I've said in my strategy session for the last couple of weeks, the only thing worse than not having enough gold on the way up is having too much on the way down.
Mhm.
So I'm not suggesting gold's about to turn down, but when we look at how far it is above its weekly moving average, it's at historically stretched levels. So nothing says it can't become more stretched, but I wouldn't want to have half my portfolio in gold, for instance. That's a recipe for high volatility. I don't want that. Hold what's working. But sometimes if you think you've got too much and maybe you're not sleeping well at night and you're worried about what the gold price is going to do overnight, sometimes maybe skimming a bit off the top is a good idea when prices are near their highs. So you're taking profit on your terms, not with the market selling off. And again, I stress, I'm not suggesting the gold price is going into any tailspin anytime soon, but it has been an exceptional run. And I get asked, I had a subscriber, a Motion Trader member, mentioned to me a few weeks back. He said, "Oh, look, the ASX has been moving higher, but my stock, which has a lot of gold stocks, has come back a bit, and that's a bit uncomfortable." It's like, well, gold's just been having a gentle consolidation over the last 6 weeks. If that's uncomfortable, you've got to consider what's it going to feel like when gold has a more volatile shift to the downside, which it will have at some point. Just don't know when. So it Northern Star still looks good to me. Want to ride the trend, but I don't want to be too aggressive after a big move's already in the well and truly in place.
All right, fantastic. I'm going to finish off today. Thanks, Jace. It's been a great show with a lot of people's tickers and some good ideas, and then maybe some not so good ideas to look at right now. But I'm going to finish off with a comment here, which is great from Daniel here. No one can predict the market, regardless of experience and intellect. That's exactly right, Daniel. You've absolutely nailed it, I think, there. But I think the game is, as usual, and correct me if I'm wrong, Jason, because I've got some great compliments for you here and what you do. The game is to pick the probabilities that look to favor a trend. Effectively pick the probabilities in the market that look to be trending and aim towards those. Obviously diversify your portfolio. Don't just pick one stock that's trending and put all your money in that. Have up to 10 to 20 stocks if that's what your capital can allow. If you don't have enough capital, then just build on that as you go. All right, build on that over time, but just at the same time, with whatever capital you've got, just try and diversify as best as you can, because of if I look at the comment here from Rodney, who said, you're in the right place. My top 5 stocks are 191%, 156%, 95%, 80%, 78%, thanks to you, Jason, while owning 33 stocks at the moment, nearly all in profit. It's great to hear. Now, obviously, that's one case. I'm doing all right with my Motion Trader portfolio as well. We're in a hot market. We weren't 3 months ago, but we're back into a hot market, right? So a lot can happen. Anything can change. Can all go the other way. But I think, am I right in saying, is trying to pick the probabilities that are trending and going your way, and hopefully you've got half a chance.
Yeah. Look, the comment's 100% right. No one can predict what's going to happen. I think people who do suggest they can predict, you just shouldn't listen to them because they can't. No one sees the future. So it's about balancing risk with the potential for reward, and it's about looking at, for me at least, it's about looking at what's working and then, i.e. stocks which are above moving averages, and running with those, looking for the setups in stocks which are already show signs of having upward momentum, rather than trying to pick turning points and ones which are in decline. And I think what we're doing when we look at the chart structure, we're often taking the market's temperature and we're saying, okay, now if the market is below declining moving averages, well, it's cold. I don't want to play in a cold market. If it's elevated and stretched above its moving averages, well, then it's got a fever, and I probably don't want to play there either. I want to play when it's warm, and that's when prices above moving averages, it's rallying off the averages or breaking out of a range, because that's where I know I can minimize my downside risk, because we can do some clear calculations and say, look, okay, we can risk 10 or 15%, or we can have a wider 25% type of stop, but it looks like our upside potential is possibly a multiple of that. And so we never know which ones are going to work, which ones are going to deliver the biggest reward. So we then say, okay, let's have a portfolio of stocks with the right characteristics, and the ones that run, let them keep running. Some of them may run several 100%. Plenty of them will fail or just do modest gains, and that's okay. They'll net one another out mostly, and it's those few big ones where we've been able to get ourselves in through getting the right sort of structure, the right risk-reward parameters. That's where we can nail our outperformance over time. And there are going to be periods when our style doesn't suit, no matter what your approach is. There's going to be periods when it's out of sync with the market. That's okay. That's all. That's just going to happen. And but then staying the course, sticking to your process, and respecting risk. Respecting risk, and then when things are working, maximize your upside. That's how it all works. It's not a predicting game. It's a numbers game. It's about probability. It's about putting odds in your favor, and respecting risk. So forget the crystal ball. Forget the theories that say we can predict what will happen because this has happened. No one knows, but we can play good risk reward and good structure in our setups.
Yeah, we talk about this all the time, as well as being able to protect your capital. It's such an important thing to put all that together. So look, if you need to recap over some of the teachings and the systems that we have, like just go back to our initial shows where we've got 12 weeks of talking about all this, and how we put these systems together. Or it's Jason's system anyway. So that said, another great comment here from Neil. Thanks for all your teachings, stock reviews, all help to improve their portfolio and performance from Neville. Sorry. So thanks, Jace. That said, don't forget, we don't know your situation. So please do your own research, do your own due diligence on everything we talk about. This is general advice only. But please, go and check out Jason's website at motiontrader.com.au. You can download his free systems there as well, if you want. And if you obviously want to check us out at Selfwealth, just go to selfwealth.com.au. Don't forget to like and subscribe on this video, like and subscribe on the channel, I should say. Like the video, put a comment down there if you want, on the video as well. That'd be great. Other than that, Jace, thanks again.
Rog, been fun as always. Thank you everyone for coming and joining us, giving us plenty of good stocks to look at. It's look forward to next week.
Beautiful. Have a good week, everyone. Thanks for